Welcome back to the Daily Crypto Deep Dive. Everyone is watching Bitcoin fall. Everyone is asking whether Ethereum has lost momentum. And everyone is staring at ETF outflows, weak charts, nervous headlines, and wondering whether the big institutional crypto story has suddenly gone quiet. But that is not the most interesting thing happening right now. The real story is that the money has not completely left crypto. It has moved. And right now, two of the names still pulling serious attention are XRP and Hyperliquid's Hype. That is what today's deep dive is really about. Not just Bitcoin is down, not just Ethereum is struggling, not just another red day where everyone panics, opens the chart every 5 minutes, and starts wondering if they should have listened to their mate who said it was all going to zero. This is about something more important. It is about whether the crypto market is starting to split into two very different groups. The assets investors are walking away from, and the assets investors are still willing to back. But then you look under the surface, and something strange appears. XRP-linked funds reportedly added around $59.4 million in June, while Hyperliquid's Hype funds reportedly pulled in around $161 million in net inflows. And this is happening while investors have been moving away from Bitcoin and Ethereum products. So the question is obvious. Why would investors reduce exposure to the two biggest assets in crypto, but still put money into XRP and Hype? Is this smart money quietly rotating into the next winners? Is this just a short-term hiding place while Bitcoin bleeds? Or is this the early sign that the next crypto cycle might not be led by Bitcoin and Ethereum in the same way as previous cycles? That is the question we need to get into properly, because if this is real rotation, then it tells us something very important about where the next opportunities could be forming. Before we get into it, a quick word from our sponsor, Kraken. Kraken is one of the best-known names in crypto. If you are buying, selling, or holding digital assets, using a serious platform matters. This show is not financial advice, and you should always do your own research. But if you are getting involved in crypto, make sure you are doing it properly, safely, and with an exchange that has been around the block. And if you enjoy the show, make sure you follow, leave a rating, and comment with the coin you think is being underestimated right now. One random comment on this episode could be in with a chance of winning XRP, and next week it could be you. The first thing to understand is that this is not a normal altcoin pump story. Usually, when Bitcoin is weak, altcoins get destroyed. That is the old crypto rule. Bitcoin drops 5%, smaller coins drop 15%. Bitcoin goes sideways, altcoins bleed for weeks. Bitcoin sneezes, the rest of the market ends up on life support. That happens because Bitcoin is still the liquidity anchor of the whole market. It is the asset institutions understand first. It is the asset that gets the headlines. It is the asset that decides whether most people feel bullish or bearish. So if Bitcoin and Ethereum are under pressure, you would normally expect everything below them to be hit even harder. But XRP and Hype are showing something different, and that matters. Fund flows are not the same as social media hype. A price can move because retail traders are chasing candles. A coin can trend because influencers are screaming about it. A chart can look strong for 48 hours and then completely collapse. But fund flows tell you where more structured capital is going. They do not guarantee future gains. They do not mean an asset is safe, and they do not mean institutions are always right, because institutions get things wrong all the time. But they do show preference. They show where money still sees a reason to allocate when other parts of the market are being sold. Let's start with XRP. XRP is one of the most loved and most hated assets in crypto. There is almost no middle ground. Some people think it is one of the only crypto assets with a real payments use case and serious long-term institutional potential. Other people think it is an old coin that has underperformed for years and survives mainly because it has one of the strongest communities in the entire market. But whether people love XRP or hate it, they cannot ignore one thing. XRP keeps surviving. It survived the bear markets. It survived the regulatory war. It survived being written off again and again. It survived years of people calling it dead, finished, irrelevant, and never coming back. And now, when Bitcoin and Ethereum products are under pressure, XRP-linked funds are still seeing inflows. That is not nothing. The XRP story is powerful because it is simple enough for normal people to understand. It is not trying to sell people on another complicated layer 2, another restaking mechanism, or another token where you need 4 white papers and a calculator just to understand what it actually does. The story is payments, banks, cross-border movement, settlement, liquidity, and regulation. You can debate how much of that has been delivered. You can debate whether the token captures all the value people claim it will. You can debate whether XRP deserves the size of its community. But the narrative is clear, and in a market where people are tired, clarity matters. That is one reason XRP keeps pulling attention. It has a recognizable brand. It has regulatory history. It has a massive retail base. And now it has investment products that give more traditional investors a cleaner way to get exposure. The really interesting part is that XRP inflows are happening in a weak market. That makes them more important, because if everything was flying, XRP inflows would be less impressive. In a full bull market, money goes everywhere. Good coins pump, bad coins pump, dead coins pump, and coins with no product, no revenue, and no reason to exist can still rip because liquidity is drunk and everyone thinks they are a genius. But selective inflows during weakness are different. They suggest investors are making choices. They are not just buying everything. They are not just saying, "Give me crypto exposure." They are looking at specific names and deciding those names still deserve attention. That is why XRP matters here. It is becoming a test of whether institutional investors want more than just Bitcoin and Ethereum. It is a test of whether the fund and ETF-style world can expand beyond the top 2. And it is a test of whether one of crypto's oldest and loudest communities was right to keep believing. XRP has been mocked, doubted, and dismissed for years, but it is still here, still liquid, still talked about, and now still attracting capital during a weak market. Now let's move to the other side of the story, Hyperliquid's hype. And this one is completely different. XRP is the old warrior. Hype is the new weapon. Hyperliquid has become one of the most talked about projects in crypto because it is not just selling a dream. It is attached to actual usage. It is a decentralized exchange focused heavily on perpetual futures trading, built around its own high-performance layer 1. That is important because perpetual futures are one of the biggest battlegrounds in crypto. This market loves leverage. Traders love perps. People want to long, short, hedge, speculate, and sometimes blow themselves up at 3 in the morning because one candle moved the wrong way. Perpetual futures are where a huge amount of crypto trading activity happens, and for years, centralized exchanges dominated that world because they were fast, liquid, and easy to use. Decentralized alternatives often struggled. They could be slow, expensive, fragmented, or just not good enough for serious traders. Hyperliquid's pitch is basically this. What if you could get something closer to centralized exchange performance, but with on-chain transparency and self-custody? That is why Hype is different from a normal altcoin. It is not just community plus vibes. It is tied to a platform people are actually using. And in crypto, that is rarer than it should be. Most projects talk about adoption. Hyperliquid can point to traders, volume, activity, fees, and a product that people clearly want. That does not remove risk. It does not mean hype can only go up. It does not mean the valuation is automatically justified. But it does put hype in a different category from coins that only move because someone made a good meme. This is where the XRP versus hype comparison becomes fascinating. They are both seeing interest, but for completely different reasons. XRP is about the payments narrative, regulatory clarity, brand survival, and the possibility that traditional finance eventually uses digital assets for settlement and liquidity. Hype is about crypto-native product market fit. It is about traders using a platform because it actually does something they want. It is about revenue, volume, and the idea that decentralized exchanges can compete with centralized venues in one of the most profitable parts of crypto. So, when both of them attract money while Bitcoin and Ethereum are under pressure, the message is not simply alt season is here. That would be too easy. The message is that investors may be getting more selective. Bitcoin is still the king. Let's not be ridiculous. If Bitcoin breaks down badly, the whole market will feel it. Anyone pretending XRP and hype can completely ignore Bitcoin is probably lying to themselves. But Bitcoin is not the only story anymore, and Ethereum is not automatically the only institutional alternative anymore. That is the shift. For years, the institutional crypto ladder was simple. First Bitcoin, then maybe Ethereum, then probably nothing else. Bitcoin was digital gold. Ethereum was the smart contract platform. Everything else was seen as too risky, too small, too legally uncertain, or too hard to explain to a room full of people in suits who still call every coin Bitcoin. But that world is changing. If investors can get cleaner exposure to XRP, and if they can access hype through more structured products, then the investable crypto universe starts to widen. And once that happens, Bitcoin and Ethereum have to compete for capital. That sounds obvious, but it is a huge psychological change. Bitcoin used to benefit from being the default. Ethereum used to benefit from being the obvious number two. But if capital becomes more tactical, more narrative-driven, and more product-specific, then money can leave Bitcoin without leaving crypto altogether. That may be what we are seeing here. It is not necessarily crypto is dead. It may be lazy crypto exposure is dead. The old trade was simple. Buy Bitcoin, buy Ethereum, wait for liquidity, and hope the cycle repeats. The new trade may be different. Buy the assets with the strongest specific catalysts. That could be XRP because of fund inflows, regulatory positioning, and payment speculation. That could be hype because of decentralized derivatives, real usage, and protocol activity. That could be something else next month. But the market is telling us that broad exposure is not enough anymore. Investors want a reason. And right now, Bitcoin's short-term reason has weakened. That is the uncomfortable part. Bitcoin's long-term story is still powerful. Fixed supply, digital scarcity, hard money, institutional adoption, protection against currency debasement, and a neutral asset outside the banking system. That story still matters. But in the short term, Bitcoin has a problem. The ETF excitement has cooled. The price action has disappointed. The macro backdrop has not given bulls the easy liquidity wave they wanted. And with AI attracting so much attention, crypto is no longer the only future of technology trade in town. Ethereum has a slightly different problem. Ethereum is still one of the most important networks in crypto. It remains central to decentralized finance, stablecoins, tokenization, layer 2s, and smart contracts. But Ethereum has struggled with a messy narrative. Is it money? Is it technology? Is it an app store? Is it settlement infrastructure? Is value moving to layer 2s? Are fees too low to support the monetary thesis? Are competitors eating its growth? Ethereum may still win long term, but it has become harder to explain simply. And in a weak market, simple stories win. That is why XRP has survived so well, and that is why hype has broken through so quickly. They are easy to frame. XRP is the payments and settlement coin that refused to die. Hype is the decentralized exchange token with real trading activity. Bitcoin is digital gold waiting for the next liquidity wave. Ethereum is the world computer still trying to clean up its narrative. And in a nervous market, the cleaner story often gets the cleaner bid. But now, we need to be brutally honest about the risks. With XRP, the risk is that inflows do not translate into enough price momentum. XRP has had many moments where the community expected a breakout, only for the price to disappoint. It also faces the challenge of proving that the investment case is not just based on hope, but on actual demand, actual adoption, and actual token utility. The XRP army is powerful, but belief alone cannot carry an asset forever. At some point, the market wants evidence. With hype, the risk is almost the opposite. The fundamentals may be strong, but the valuation may already be pricing in a lot of success. When a token becomes one of the hottest names in the market, expectations get dangerous. If volume drops, If traders move elsewhere, if regulation hits decentralized derivatives, or if token unlocks create pressure, the downside can be violent. Hype is exciting because it has real usage, but real usage does not make any asset immune from overvaluation. That is the part people forget in crypto. A project can be good and still be a bad buy at the wrong price. A protocol can be impressive and still have a brutal drawdown. A token can have revenue and still fall if expectations were too high. So the serious answer is not, buy XRP and hype because institutions are buying. That is lazy. The serious answer is that XRP and hype are giving us clues about how the market is changing. The market is no longer rewarding everything equally. It is rewarding assets with a clear reason to exist. That might be the most important takeaway from this entire episode. In the next phase of crypto, the winners may not simply be the biggest names from the last cycle. They may be the assets that can answer one question better than everyone else. Why should capital come here? For Bitcoin, the answer is scarcity and monetary belief. For Ethereum, the answer is infrastructure and settlement. For XRP, the answer is regulated access to a payments and liquidity narrative with one of the strongest communities in crypto. For hype, the answer is a crypto-native trading machine with real usage in one of the most profitable corners of the market. That is why this moment matters. Because if Bitcoin and Ethereum recover strongly, XRP and hype could still benefit from broader market confidence. But if Bitcoin and Ethereum keep struggling, XRP and hype may become even more important as examples of selective strength. They are not just coins getting attention. They are signs that capital is hunting for a better story, and that is exactly what crypto needs right now. The market does not need another empty promise. It does not need another influencer screaming about it 100 times. It does not need another project with a roadmap full of words nobody understands. It needs assets with catalysts, demand, and a reason to survive when the easy money is gone. And right now, XRP and hype are two of the clearest examples of that battle. One is old crypto trying to prove it was right all along. The other is new crypto trying to prove the future is already here. That is why this episode matters, because this might not just be a story about two altcoins doing well during a bad month. It might be the early outline of the next crypto hierarchy. Bitcoin will still matter. Ethereum will still matter. But the idea that they are the only institutional crypto trades worth watching is starting to look outdated. Capital is not loyal. Capital does not care what coin you love. Capital does not care what worked last cycle. Capital goes where it sees opportunity. And right now, some of that capital is looking beyond Bitcoin and Ethereum. That does not mean the bull market is over. It means the bull market, if it returns properly, may look very different from the one people expected. So keep watching the flows. Keep watching the narratives. Keep watching whether XRP can turn institutional interest into price strength. Keep watching whether hype can turn real usage into sustainable token value. Because if this trend continues, the next big crypto story may not simply be Bitcoin versus Ethereum. It may be Bitcoin and Ethereum trying to defend their throne against assets with sharper stories, clearer catalysts, and hungrier capital behind them. And that is where the opportunity could be. Not in chasing every green candle, not in panicking every time Bitcoin drops, but in understanding where the money is quietly moving before everyone else catches up. Bitcoin is bleeding, Ethereum is struggling, XRP is still attracting money, hype is still attracting money. And in a market this weak, strength stands out. As always, none of this is financial advice. Do your own research, manage your risk, and never invest money you cannot afford to lose. But do not ignore what the market is showing us. The money has not disappeared. It has moved. And if you can understand where it is moving before the crowd does, that is where the real edge might be. Thanks for listening. Thanks for supporting the show, and we will see you at the top.